a sense of capital.
Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today is Julian, as always, and I'm glad to have you in, guys. Yeah, and today we will cover, as always in the live earnings sessions, the quarterly results of company I'm a shareholder of, and this time we will cover the results of the cybersecurity company out of the US, SentinelOne. But guys, before we jump in, a quick disclaimer. As always, in the upcoming minutes, that's no financial advice, consultation whatsoever, and there is no guarantee for correctness of the provided data, so make sure you do your own due diligence, your own research process, make your own decisions, because at the end, you need to live with your decisions. It's your financial destiny, let's say it like this. Okay, guys, so what is wait, let me correct this a bit, adjust it. Okay, now it looks a little more clean. Okay, guys. So what is SentinelOne? SentinelOne, as you can see here on the website, is, as I mentioned, a cybersecurity company. Oh wait, there's someone in the chat. Laurie Sparks 6215. Thank you very much for joining again. Jittery at the moment though. Yeah, might be the case. The ape emojis make sense, collega. But I jump quickly in and then I screen here and there again the comment section. So guys, again, that is the cybersecurity company SentinelOne we will cover today. I'm actually a shareholder of this company since 3 years whatsoever. Had the break in between and then rejoined like 1.5, 2 years ago. Yeah, it's a rough ride for all of you who are invested. You know what I'm talking about. And yeah, let's check out in a moment the results and see if this ride will stay a little bit more eruptive, let's say it like this. So what they are doing, they offer basically a platform with different kind of products and services. I mean, their legacy business is endpoint security. Major competitor, as you likely know, is CrowdStrike. But as well, they're active in cloud security, in identity security, but as well they provide data and AI solutions. And of course, nowadays, everything is about AI as well in the cybersecurity space. On the one side, securing, for instance, devices with the power of AI, with autonomous agents who can independently, autonomously work on the devices without connection to a cloud, for instance. But on the other hand, to secure AI solutions like AI agents. Therefore, they acquired another company, for instance, end of last year, like Prompt Security, or Observer AI. So they really try to tackle this AI topic very strongly. They don't actually do this like because it's a trend currently and you just want to hit those words and just frame it. No, they really do this since their founding, since more than 10 years ago, I think 2013 or something like this. So there are definitely some OGs in the space, at least in terms of the cybersecurity space, and quite enhanced in this regard, let's say it like this. Okay, and as you can see here, the earnings results are high PSE sellers. Thank you very much for joining, and you're very welcome. I need to do this anyway, and of course I love to share experience with others. So yeah, but however, I appreciate your feedback. As you can see here, the fourth quarter results are already live since a few minutes, and as well, not only press release, but as well the PowerPoint presentation slide deck. So later on we will run quickly through the slide deck, but as always, as you are used to it, I copied all those information into my almost famous or already famous Excel sheet, and yeah, looks like a lot of strange and demanding stuff, but it's actually quite simple. And yeah, I would just recommend or suggest that we start to go through it. And we start, as always, with top and bottom line growth, so revenue and profit side. You can see always here the results of this quarter, the outlook for the next one, the results of the past one, and the same structure for the year ago. And let's see what was what was, let's say, the expectations, the forecast by the analysts, and the actual revenue result. You can see here in blue, the expectation was from the market roughly 271 million, and they really provided a tiny, small beat. Very small beat, guys. And you can see here my target was roughly like 274 million. So that they definitely missed this, no doubt about this. And yeah, I honestly expected a more huge beat, basically on the same level like 1 year ago. You can see here they achieved a beat of roughly 3 million. Even this one is not that crazy huge, but it's very regular for SentinelOne that they're not putting the marks very low and do sandbagging. Most of the time they set up a mark and they quite slightly go through it and hit the mark. But this time it was really close catch, guys. Almost a miss, let's say it like this. And not convincing for me in terms of the actual results. Again, it's lower than my expectations, but it was really just a small beat. So not positive, yeah. That's for me negative. But what they do as well, they grant a guidance for the upcoming quarter and the upcoming business year. Let's start with the upcoming quarter. Later we'll talk about the business year. So quarter-wise, you can see here target is, or what they have mentioned is $277 million for Q1, for the ongoing quarter, let's say like this. And that is a raise by, you can see here quarter on quarter by roughly, when we just take a look on the forecasts, on roughly 6 million. And last year it was as well roughly 6 million. So it's okay from my perspective to, on a relative scale, not keeping a growth level for all the years in the future. It's very regular that you start maybe with 40% year-on-year growth, then you go to whatever 35 and so on and so on. But the absolute number, so like the US dollar amount, should be higher each year from my perspective. And that is not the case. Yeah, it's actually lower. So as well, guidance is not that nice. And what was my target? Was it like 268? Really? Don't think so. Yeah. So, however, I mean the current results, the current revenue results, and as well the outlook, both is not that heavily convincing for me, honestly. Not sure if I'm missing something, but yeah, so far it's very simple and easy, even though I don't like to grant this kind of ratings, but I color it red, which means I rate it so far negative. And you need to know that for me, I'm investing in SentinelOne, so even the camera can't stay still with this kind of results. Let me check if you can still see me. Let me put this up a bit. Okay, good. Yeah, for me it's an investing case because of revenue and because of profitability growth. So it's not all about revenue, but for me, in all my investments, revenue comes always first. I want to see that revenue is developing in the right direction because from my perspective, profitability will follow on sooner or later, most of the time, let's say it like this. And the revenue base needs to be the solid fundament. And yeah, unfortunately, that doesn't look, for me at least, so well. Yeah, so that's not that nice. But what we can see here is what I added to it is to achieve the 2025 guidance, they just need to hit the mark of 270.89 million for this quarter, and they achieved it. So at least they achieved their full year guidance. Yeah, so that is good. They crushed through the 1 billion full year revenue target, and that is nice. At least that's something positive, but actually something what I really expected, because otherwise they would really miss their quarterly results target, and that would be an absolute no-go. So however, so it's not crazy negative, but I don't like it much. It is how it is. Okay, let's see what is going on with the profit side. So for sure it's way better at least on a non-GAAP base, then compare it to the Q4 results of 2024, 1 year ago. And yes, it's a beat. Yeah, forecast was $6 US. Now they achieved $7 US. So a small beat by $1 US. But I wanted to see ideally the beat on the same absolute level like 1 year ago. And you can see here they beat it by roughly $3 US, and now only by $1 US. So yes, it's a beat. It's not like worst case. I need to be honest here, but it's for sure lower than I expected. Yeah, maybe it's not even in development in terms compared to Q3. I rated negative. Come on, I don't need to be too kind here. I think there's no need for it. Yeah. So far, so bad, guys. So that's not really compelling. It is how it is. And that's very unfortunate because, as you know, most of the times when I start and already top and bottom line is not looking too positive, too compelling, it's very unlikely that the company can achieve a turnaround by all the more company-specific details. But let's see. So what I can tell you already now is that, and that's always the case, a lot of those information they grant during the earnings call, so make sure you join the call. I will not stream it, I never do this, guys, but I think it will start roughly in 17 minutes. Hopefully I'm through it till this point in time, let's see. But yeah, they most of the time they announce informations like international revenue share, so we have a better feeling what is going on with the home market US and what is going on in the foreign countries, because you can see in the past what was quite impressive was the growth in terms of the international markets. Yeah, you can see here top is US. Okay, that's declining, that's clear. Year on year quarter results, you can see it's declining, but it somehow re-accelerated internationally. Not sure in which kind of countries, which kind of continents, but that looks quite compelling. And I think some survey by the research house Oppenheimer, it was announced a few weeks ago that January and February surveys looked quite well in Europe and US when they reached out to the distributors, cybersecurities distributors, and asked, okay, what is going on, for instance, with the solutions of SentinelOne? How is the market demanding those solutions? And they mentioned it's more on a beat level, like on a hold or whatsoever, so quite positive. And the year-on-year growth, revenue growth looks like more like upper 20%, in the upper 20% range, like 28% or something like this. So that's nice to see. So again, in the US and in Europe, not in India or Abu Dhabi, in Emirates or whatsoever. I assume they have a good footprint there as well. So I think really international growth, and that's the reason why the title of the stream is mentioned like it was or is. I think here we might see some potential for positive surprise on the international scale, and if they can keep this momentum on the international level, on the same page, stabilize the year-on-year growth in the legacy market in the US, or even re-accelerate it tinily, maybe back to 20%, it could really surprise somehow, because nowadays, as you can see here, the international revenue share, at least past quarter, was already on 40%. So I like this about these companies. Some prefer that they are very strong in the US. I prefer due to diversification reasons and due to the fact that I'm investing just in 4 companies, or I'm investing in 4 companies right now. I prefer that those 4 companies, if possible, are somehow diversified with their revenue streams and sources. And yeah, I like that 40% of revenue, at least past quarter, and I assume it will be on the same level or even higher this quarter. is the case in case of SentinelOne. But again, this international share will likely get announced during the earnings call later on, so check this out by yourself. Now we have a very, very important number, actually more important number for most of you than the revenue, because we talk about a SaaS company, software as a service. You know, we want to have this stable, consistent and reliable revenue streams, and this is based on this annual recurring revenue. So basically the contracts of the subscription models, the KPI, basically the number when we talk about SaaS companies, and how you compare SaaS companies on first glance. And you can see past quarter it was roughly 23% year-on-year growth, now 22% year-on-year growth. I would love that they're getting stabilized, and that is not the case. It's getting further down. Yes, net new ARR is on a record high. You can see it here with roughly 64 million. Yeah, it was never that high, not in 2024, not in 2025. That's great. But if you check out the competitive environment of SentinelOne, especially the direct competitor, which is called CrowdStrike, you will quickly figure out that they experiencing a higher ARR growth at the moment, and especially I think they expect a revenue growth something on 22-23% for next business year, and that is not the case. That is not the case for SentinelOne, which should be actually the hungry, smaller predator, let's say, like this, who catches market share. I was exactly in this situation 2 years ago, 2.5 years ago, something like this, when I was first time invested in SentinelOne for a few quarters, and I always had this hope that they are this hyper growth company who digging shares, grabbing shares from competitors like CrowdStrike, and it didn't run out like this. And on a certain point of time, I need to sell, because my original thesis was I'm invested for it because of hypergrowth, revenue hypergrowth, like really 40%, 50% year on year, this kind of stuff. And I experienced, and yeah, it was just fact, okay, they can't keep this momentum, they will drop through 30% and lower. And now my new investment case is more like, or was, okay, it's still fine. I want to be invested in SaaS. I want to be invested in cybersecurity. It's my favorite space to be invested in. But I want to see that they keep at least 20% plus revenue year-on-year growth, and they reach profitability soon and have a clear path to it. Yeah? And they stop doing this high stock-based compensation stuff and free cash flow getting positive and all of this. So not just revenue getting stabilized, but as well profitability getting stronger and stronger, or at least some gap-based profitability takes place. And yeah, we will see it later when we talk about profitability, but we already have seen it here on the first glance that, yeah, there is some development going on, but it's not really like Teflon perfect, you know. It's not like match in heaven. There's definitely some challenges existing, I assume. Okay, guys, let's go through it. And we have here RPO, a number which getting more and more mentioned in the past as well because of AI. What's remaining performance obligations. So basically the stuff what they expect, or which is most of the time already actually signed and covered by agreements, but not getting executed so far. So I mean, based on accounting principles, most of the time, the turnover, revenue, and all of this takes place as soon as products getting delivered and performance taking place, let's say like this. So this is basically their order book, if you want to call it like this, an order book, and a glance into the future. And you can see here, they rarely share this number, most of the time in the full year results. So maybe later in the call they will share some information in this regard with us. So past year in Q4 it was 1.2 billion, and past quarter they mentioned it was 1.3 billion. Yeah, so that's nice to see it's stable and it's quite strong. But we need to check later on in the call what is the current status. Peggy Wang 5404 writes in the chat, "Hi, thanks for opening this live. Are we going to listen to the earnings call in this chat and Q&A later when they start? Thanks." No, we don't. Sorry, sorry, Peggy. Every time I'm confronted with this inquiry, and I understand it completely, but so far I've always decided to not share the earnings calls most of the time because I'm not done when the earnings call starts. Yeah, it always takes a bit more time for me to cover the result. But on the other hand, when I check this, how other YouTubers guide it, they simply are silent through the whole call. It's no difference if you watch it by yourself or watch it through a YouTube channel. But okay, each on their own decision. And then in the end they just say, okay, yeah, let's see what will be the market reaction tomorrow. That's most of the time more or less the summary of the YouTubers from my experience. So, and it would be not different when I would cover it. So I've decided to not guide and back the live stream, the earnings calls. And what I do is I always read the transcripts most of the time on the weekends after the release is, like next Saturday or something like this. And then while drinking a tea or whatsoever, I take my time to reflect about the results. I enter them to this table here and considering in my evaluation. Yeah. But let's see. However, this earnings call is very interesting because I mean, cybersecurity is, as you know, is a hot topic right now because of all of this AI stuff going on. And again, they sometimes mentioning some very interesting numbers here as well, like the customer amount. We don't have it right now. Just the large company customers. You can see it here, like 100,000 annual recurring revenue plus. Those customer numbers always getting shared, but never in the press releases the overall customer base. However, past quarter they mentioned in the call it was roughly 14,000 overall customers. So let's see how the overall customer count has increased because it's quite large. They have a lot of small cap companies as their customers who might grow into mid-sized ones, might grow together simultaneously with their business. Will Sentinel grow? So that might be a good catch. I think it's always, it's always part of the investment strategy of this company to put the seed very early in smaller companies and make sure they stay loyal and grow. The customers grow, and SentinelOne will participate, of course. And best in case, they will grow at a certain point of time to 100,000 ARR customers plus, or even million customers plus. Yeah, and you can see here what is going on with this development. We're talking now about 1,667 100,000 plus ARR customers. And you can see past quarter it was 20% year-on-year growth, and now it's roughly only 18%. Yeah, 2% down. It's quite strong, this dip in my perspective. So that's the first rating I can leave here, and I will rate it straight negative. Yeah. So even if the absolute jump is not that heavily bad, it's less than 1 year ago. You can see here 1 year ago, for instance, it was 101 new big customers, and now it's definitely below. Yeah, it's just like 95 of them. So that's not that compelling from my perspective, convincing. Okay, guys, and because we don't have the customers' numbers and we can't calculate the revenue and ARR per customer, that is what I need to do later again. Laurie Sparks, you're writing, is anyone actually up on the stock or are we all down? Will anyone be averaging down? I think we are all back holders, and I will maybe add later some additional words to it, but I assume a lot of people are down. It's really difficult, and You need to be really good in hitting the right spot and the right point in time to be up. Actually, I think really no number of current investors are up. Actually, I averaged down very aggressively in the past weeks. Yeah, Northwestern win back holder gang. Yeah, for sure, man. Not sure if I want to be part of this gang, but I think there's only this gang, more or less. Yeah, but honestly, in all seriousness, I need to really think about, and I will check later on the earnings call transcript and the earnings call itself. I really need to think about if I keep it or not. Yeah, because again, now I think it seems like they even be challenged with keeping the 20% year-on-year growth momentum. So yeah, it's really awkward, let's say like this. It's really awkward because you can see, I mean, if the whole sector, the whole industry had some issues, I would say, okay, it is how it is. Maybe it's some macroeconomics and some delayed market decisions, yeah, whatsoever. But if you can check out the results of CrowdStrike, it looks quite good. And of the other cybersecurity players, it looks quite well as well. And of course, when you listen later to Tomer, to the CEO, he's the CEO. He will add some good information to it, some very positive stuff, and later in the presentation slide deck, I assume there will be some good information as well, which are kind of gives you more color and positive color, of course, but it is always about as well, okay, what is the relative perspective? What are the competitors doing? What is the sector doing? And do they lose space or do they grab share? Let's say like this. And it doesn't seem to be this case for me. And I'm not sure if I want to be invested into winners. I don't want to be invested into companies because they are just cheap or whatsoever. Yeah, that's not the case. And I'm not sure if SentinelOne is truly a winner company and has this DNA. Not sure where is it lacking, because it's clearly not a technology. It's very likely somehow sales, the positioning, distributor setup. I have no clue, but this can have a big impact, and it is definitely difficult to evaluate it as a retail investor like we are. Yeah. Okay. So, however, yeah, we are all begging the losses, and we are part of this game. Yeah. Okay, let's go on and take a look on the shareholder orientation and how they can add value to us as investors. And we start with the profitability. We start with the cross margin on GAAP base. And we can see it's on 73%. And you can see it is almost the lowest in the past 8 quarters, in the past 2 years. It was only on the same level at Q1 2024. You can see past quarter it went already down 1%. Now it went down another 2% year on year. Yeah, so from 75% to 73%. I don't like. I leave a negative rating. And now let's check out what is going on with the operating expenses by really screening the different specific cost sections, general and administrative, sales and marketing, and research and development. We start with G&A. And what is the share of revenue on a GAAP base, of course. And you can see on the first glance, guys, maybe we start with this. I hoped somehow they cross the 100% mark below, yeah, so like 90% something, 99 whatsoever, because you can see they really went down this ladder and it looked quite convincing. And yeah, it's way stronger than 1 year ago. It was 110% operating expenses based on revenue, so operating expenses have been higher than the revenue, and it's nice to see, but yeah, they didn't hit this mark and cross this mark, which is kind of unfortunate. So let's check out why. G&A again. You can see 18.6% of the revenue is G&A. The administrative costs, last quarter it went down 5%, now it went down year on year roughly 2%. So it's deaccelerating a bit. I think that is not that bad. I assume in GRA, in terms of G&A, there's a lot of room for improvement as well when they, for instance, acquire new companies like Prompt Security and Observer AI, what they did recently. There are the synergies existing. You don't need two accounting departments, for instance. Yeah, so there you can definitely save some money. But first, when you acquire them, you have this double cost and all of this kind of stuff. So I assume, especially in terms of G&A, there's definitely some room for improvement, and I want to see this. And yeah, it looks like this. It is it is all-time low, even though the development is deaccelerating year on year. Again, still minus 2%, but it seems like they're getting closer and closer to a kind of floor, of cost floor. So it is okay. It's not crazy good, but it's okay for me. Let's check out what is going on with sales and marketing expenses. I mean, cybersecurity and SaaS in general, very, very competitive. And sometimes sales and marketing costs are even kind of an investment into the future, even though obviously it's not an investment. It's not in the investment bucket like sales and marketing. It's not regular to put it in there. But you can see past quarter it went down by 10%, and this quarter down year on year by 6%. So that looks quite solid. It's not an all-time low. It is not. You can see here. It was past quarter, it was lower, so they restart to promote. It can be the case that, for instance, again, they acquired now Prompt AI and Observer AI. They want to position it right. They want to push stronger the gas pedal in terms of Purple AI promotion, their AI solution. So it doesn't have to be bad. But it's not as well, not crazy good, but it's okay. It's getting lower, and I'm happy about this in general. So, but why it's getting up again? So what is the case? I mean, yes, we already know S&M is a bit higher, but here you can see as well research and development is higher. And I mean, out of the three cost buckets, research and development expenses for me the one which I can understand the best, because that's really investment into the future. I mean, it's just a sector, cybersecurity is a sector, your enemies, let's say like this, so people who are hackers, for instance, organizations who are hacking, countries who are hacking whatsoever, all those solutions, these critical solutions, let's say like this, you need to defend your customers for. They're developing as well very quickly, especially through the use of AI, and as well your competitors in terms of the sector, like again CrowdStrike, they are developing quickly, but as well Microsoft, but as well Palo Alto, which has been the deal has been signed, I think today or yesterday with Alphabet. I think 32 million, crazy acquisition in the space. So all of them, there's definitely some crazy strong competition in the space, and it's actually something what was always, it's my favorite sector, cybersecurity, because it has this high growth aspect, it has the SaaS aspect, and it has this almost value and secured low volatility aspect in terms of the revenues, because again it's SaaS, and because I mean you can't before you really shut down the doors as a company and you cancel business, you can't cancel and fire your safeguards, the security guards of the company buildings. Let's say it like this. It's essential, yeah. And it's the same with cybersecurity nowadays. It is you need to keep these contracts as a company, as a customer of, for instance, SentinelOne till the end, very likely. Otherwise, you might have big problems with your insurance companies, for instance, if some trouble happens, or if even no trouble happens, because then you might need to have some special additional insurances if you don't have cybersecurity products which are defending your equity, like SentinelOne's. Yeah. So, however, research and development is good investment from my perspective. and it's not that negative for me. It's getting if it's getting up, and it will always be on a certain level from my point of view. You can see past quarter it went down by 1%. This quarter it went down by almost nothing, 0.1% year on year. So it's as well reaccelerating. I rate it negative, but again, as I mentioned already a moment ago, I don't see it that heavily negative. I need to be strict here because again, it's reaccelerating. I don't like to see it. It's one of the highest percentages of the past quarters in the past 2 years, with 33%. But again, it's kind of an investment, and if they would put this on 5%, let's say like this, from one quarter to another, I would really being concerned about, okay, what is going on, and start to doubt some developments. Yeah. Okay, so now we go on and take a glance on those both KPIs which I've created by my own. So take care, these numbers, you don't need to use them one to one. It's just for me some kind of indication which I use based on the numbers they always release with the press release. Yeah. And you can see here I want to have one KPI which measures or which puts the expenses in ratio of new customers, in this case new big customers, so the existing ones. So how much money they regularly spend to keep customers. Yeah, and it's just a rough KPI. It's obviously not $60,000. Yeah, so I used 100% G&A. The administrative cost plus 50% of the research and development. It's just a rough indication, yeah. So I compared this to each other, last year's number, this year's number, last quarter's number, this quarter's number, and then I can see a tendency, yeah. And I want to see it's getting lower, obviously. And then I want to have a number which puts the expenses in ratio for new customers, yeah. So what they are spending to achieve newer ones, to enlarge their customer base. So I used the sales and marketing, 100% sales and marketing, and as well 50% of research and development. Yeah, so spread all the operating expenses across those two dimensions. Yeah, as you can see here in the brackets. So let's see what is going on here. Past quarter it went already down by 13%, which is amazing, and now it went down by year on year by 5%. It is an all-time low. So that's actually nice to see. So they're definitely getting more efficient when it's about keeping the customers, yeah, and investing lower money for achieving this target, yeah. And that's the first screen and first positive rating I can leave here. What is going on with the acquisition of new ones? And you can see past quarter it went up 38%, and now it went up by another 17% year on year. However, it is definitely lower on an absolute scale like past quarter, for sure. Big aspect, of course, is in this regard, it's not actually the expense level, yeah, so not the sales and marketing and not research and development, because that is roughly quite stable. The big jump you can see here is resulting out on the ARR growth scale, yeah. So if ARR is bad, yeah, you can see like new customers from Q2 to Q3 2025 have been roughly, what is it? 59 new larger customers, yeah, which is quite low. You can see here the quarter a year ago, Q2 to Q3, it was roughly 77. So 77 a year ago, and now only 59 more large customers, and that of course results in that each of those new customers, which is a lower amount, based on the same expenses, results in that you have higher expenses per new customer. Yeah, I hope that makes things clear, and I hope that makes things clear in terms of how this KPI needs to be interpreted. or interpreted. Yeah, and this looks now a bit better because again we have 95 new ones, and that's actually quite positive on an absolute number. But again, I always compare it to a year ago, and there it was 99. Yeah, so or it was 101. Yeah, so it went down a bit on the absolute number, and so it is negative for me, even though it is an all-time high, and even though it seems like it's re-accelerating. However, good is on the other hand that this here is now, it's not an all-time low, but it's getting low again. It's by far the lowest one for this year, for this business year. Yeah, so let's leave it in the neutral color. Not top notch, but it is okay. Okay, let's go on with profitability. Let's check out what is going with the net income margin on the GAAP level. Yeah, non-GAAP getting used a lot of times by the companies. I prefer definitely the GAAP results. And we can see a past quarter, year on year, it went up by 14%. Now it went down by 10%, so that's not nice to see. So you can see Q4 2024 was minus 31%. Now it's minus 41%. So wow, what the heck? That's not that's not nice. Simple negative, guys. I don't even want to think about what is behind this. Even if there's some one-time effects included, yeah. If that's the case, okay, but still, SentinelOne from my perspective is not in the situation that I can ignore this kind of aspects and say, okay, I take it on another level. No, I want to see it's getting positive, and I want to see a clear path. That's the reason why I invested in it. That is what I've mentioned earlier to you guys. And so far we have seen good path, let's say it like this. When you check out the history, just this year, minus 91, minus 30, minus 23, and then boom, re-accelerating. Don't like it. No matter if that's the seasonality behind or whatsoever, don't like it. Okay, what is going on with the free cash flow? As you know, free cash flow margin or free cash flow in general is not that easily affected and speaks most of the time, a lot of time, quite good truth in it. And we want to see as well, of course, that this keeps on a positive level. Past quarter, it went up by 12%, which is very strong. Now it went up year on year by 3%. You can see it was negative in the past. It was positive in the past. It's definitely better than 1 year ago, because 1 year ago it was minus 4%, and now it's minus 1%. However, they have, and that is by Thomas Weingarten, the CEO, was mentioned past quarter as a very, very clear target in front of the analysts. He mentioned, we want to achieve the rule of 40. That's a big target, and we want to achieve it soon. Yeah, and in this case, I mean, a different kind of rule of 40 is existing, but cybersecurity and SaaS, you use most of the time year-on-year revenue growth plus free cash flow margin. And I mean, we have revenue growth year-on-year. We have roughly, you can see here, 20.3% if it's correct. Yeah, we have free cash flow margin by minus 1%, so we have overall total 19.3%, so half of the target of 40 what they want to achieve. 40 means just in the startup scene, at least I think that's where it comes from, like 40% and more seems like solid business, but I think in the past you used, I think, profit margin and not free cash flow margin, however it is, how it is nowadays. Yeah, and you can see it's not that crazy high. It's not like, yeah, it has free cash flow margin, of course, has an impact here, minus 1%. I would love to see a neutral level. I want to see a positive one. I expect, or it might be the case, that 2026, the ongoing year, might be the first business year with 4 quarters of positive free cash flow and the overall total result of positive free cash flow. I expect this will be the case. Would be definitely some secondary target for me as an investor. from my perspective at least. However, this minus 1% now, let's leave as well neutral rating. Yeah, because again, it's lower than 1 year ago for sure. Developed by plus 3%. That's nice, but I really would love to see it at least on a neutral level, and that's not the case. And yeah, it is how it is, guys. Rule of 40 we already talked a moment ago, and now we check out what is going on as well with shareholder orientation in terms of stock-based compensation, percentage of revenue. We want to see as well here that's getting lower. I mean, their focus by the analysts and by Tomer wasn't that high, but now they even addressed the outlook to it. We will check this out right now actually, guys, why not? And you can see here in the press release, this is the outlook, yeah, here's the guidance. And you can see in the past, I'm not sure what the shift is about, but in the past they mentioned here, I think, adjusted EBITDA, for instance. And now they go here for non-GAAP tax rate. Okay, guys, okay. And then what is new, what I kind of like and kind of not like, I like it, I assume, but you can see how relevant it is. I already mentioned at the past earnings call during my live stream that I want to see stock-based compensation gets down. Not just this rule of 40. For me, rule of 40 is not that important, honestly, guys. Tomer Weingart, the CEO, mentioned it's important for some investors. It's important for me, not that important. Yeah, but I want to really see that. For me, really big headache was this stock-based compensation, this shareholder dilution, which is taking place, and I want to see that's getting stopped, or it's getting lower. It will never get stopped. It's part of the business, how you keep your high talented staff, yeah, high quality stuff. And I assume now the management catch this, not because of me, but they catch this and they thought about, okay, we really need to somehow limit it and make sure investors understand that we will not squeeze out and push more and more shares heavily to our employees, or at least we limit it somehow. We have some awareness about it, and we have awareness about that investors take care of it, of course, and they are aware of it, and so that's the reason why they're mentioning it right now. But let's go back into the Excel sheet, and yeah, it's based on my KPI. What I use is based on revenue, and you can see past quarter year-on-year development was negative, which is great, by minus 4.2%, now by minus 3.5%. You can see many times in the past it was more than 30%, because the business getting a little bit more efficient, more profitable. There is some kind of economy of scale existing, and synergies are existing. They can afford to lower it a bit, but it re-accelerated from past quarter to this quarter. Yeah, so past quarter 29.1%, this quarter 29.4% of revenue. Yes, maybe there might be a reason for background of the acquisition or whatsoever, of some acquisitions they executed in the past, or even the recent ones, which I already mentioned with Prompt Security and Observer AI, or whatever the reason is. I understand, again, it's part of the game to pay and make your employees loyal with stocks, with shares you grant. It's part of the game. It's part of the war of talents, let's say like this. But I'm, as an investor, it's everyone's own decision. I don't say it's, again, I understand it and it's not wrong or whatsoever. I think it's very reasonable and it's a good way. But I personally, I don't have to accept it as an investor. Yeah, so it's my destiny. Like, I can decide as well if I do sports in private life or not do, and I need to live with consequence or not. I mean, maybe it's a kind of strange example, yeah, but I think it's clear what I want to tell you. And for me, it's not acceptable that somehow the from my perspective, again, that's need to make it clear. But for me personally, it's not acceptable as an investor that the value for the shareholder, the value for me, for instance, suffers underneath share-based compensation, and underneath that the company grants very strong shares, or some dilution is going on, or whatsoever. Yeah, that's not acceptable for me. As long as the added value for me is not growing on the same scale. Yeah, and I don't have the feeling. You can see here, there's a lot of red, a lot of negative. It's not like oh man, they're reaccelerating revenue growth, they're reaccelerating ARR growth, and all of this. Yeah, and yeah, I'm fucking happy. Sorry for this word, but I'm very happy. So sorry for my French. I'm very happy, it's okay that they grant through acquisitions or to their employees or through to the management whatsoever that much shares, and this kind of dilution is taking place. Yeah, that's not okay for me. Simply for me. Maybe I'm wrong. I mean, I can't be wrong because it's my opinion, it's my take. Yeah, but so that nobody can tell me that's wrong when it's my perspective on it, when it's my feel for it. But maybe I'm still wrong in terms of that I'm taking it too seriously or whatsoever. But for me, it's very, very crucial. I like that they address it somehow now in the outlook, and I'm quite sure that right now the management, or let's say in a few moments, when analysts address questions to the management, I think they will talk about this topic, and I'm very happy about this, and I hope that the management has good answers. I mean, they want to address this topic, otherwise they would not, as I shared a moment ago, they would not push this number now into the guidance. There would no reason for this. So they are prepared for it, and I hope they find the right word to it. So it's very important, this call, what they mentioned through it, not because of this missing numbers like what is the international revenue share, what is the customer base, this kind of stuff, or the RPO, the remaining performance obligations. All of this is interesting as well, but this actually is very, very crucial for me. I really want to see what kind of information they will add to this number, why they state this, and why they think that 345 and 352 million shares outstanding is reasonable to point out, let's say like this. And you can see actually right now, I use this always to calculate the earnings per share on a non-GAAP base. You can see, so again, I think, what was it next quarter? 345 maximum, and now they are at 335, so 10 million more. Is that correct? So it seems like, yeah, if that number is correct, it seems like that there will be kind of a good jump to next quarter. Yeah, so the dilution will be quite strong in the current quarter, because 10 million more, at least in terms of the guidance, and then only 7 million more till end of the year, through the next quarters. So I think they want to make the people calm down, the investors, and tell them, okay, maybe there's one more quarter of stronger dilution, if I interpret it correctly, guys. Yeah, maybe it's based on some acquisitions or whatsoever, but afterwards we reached kind of a ceiling, and then we try to keep it more and more stable. Yeah, and dilution is not that strong anymore. But who knows if that's right? And I'm as well very interested when we talk about this non-GAAP tax rate, what they mention here with 17%. So that sounds interesting as well. Yeah. Okay, guys. Let's go back. Almost emotional about this stuff. Huh? However, guys, again, as I mentioned, I will not accept it, or at least it's not nice for me, so I leave it, of course, negative. Yeah, it's down year on year, quarter on year, when we compare this quarter to 1 years ago quarter, but again, I don't want to see it accelerating. Really, the stock-based compensation, for me, no space. Yes, they might add some information about why it's still going quite strongly up Q1 and then not anymore. But it's the same for me, like with net income margin. SentinelOne is in a position where they just, from my perspective, need to deliver, even though it's cheap. But they will never reach a certain price, stock price, if they will not perform here. And it's not for me compelling. Let's see what is going on full year guidance. We already covered it a moment ago. What I have mentioned actually is the full year target of 1.2 billion. It's exactly what analysts have expected already months ago. So that's quite solid, nothing negative about this. I mean, yes, it's I will leave it neutral, because I expect they will beat it at least slightly and they will achieve this 20% year-on-year growth, because honestly, one of my principles for this investment thesis, for this reinvesting into this company, was I want to see at least 20% plus revenue year-on-year growth. And this would mean right now that how much did they do? Wait, let me quickly check for you guys how much revenue they have achieved now during the full year. So they achieved this year roughly 22% year-on-year growth in terms of revenue, and this guidance would mean they will only achieve 19.8%. What the F? It's negative for me. It's negative. I don't want to make it better than I actually think about it. I want to see the 20%, and I want to see it from the get-go, from the start, that they go with this target, with this outlook, with this guidance, and it's lower. It's not 20%, and it's for me just part of the investment thesis. And again, I think this narrative currently is, when we talk about SentinelOne, is the big problem is not this 22% revenue year-on-year growth, or like they have achieved right now, or that they have this, that they're lagging a bit with stock-based compensation or with profitability. All of this is not a big issue. That's, again, honestly, a lot of SaaS and especially a lot of cybersecurity companies are working under similar circumstances. But what I really think is an issue is that they need to prove they're stabilizing it. That's the shit. I mean, profitability, they need to improve, obviously. That is what they need to improve on profitability level and stock-based compensation. But before putting it into the green, into the positive side, they need to first reach this neutral plateau, let's say like this. And that's not the case currently. That's not the case. That is what I really don't want to see. You see how I am changing my mind during the stream, and that's the reason why I'm doing this, guys. That's good for me, because I'm thinking out loud, and you challenge me with, when I just start the stream, to share my opinion. And it's different if you just think about it, or if you write it down, or you speak it out loudly, guys. And obviously it doesn't need to be the truth, but it's my truth. And again, from my perspective, I want to see this 20% revenue growth year on year, and I want to see it's getting stabilized, because for me it's important, and I assume for the market as well. You don't want to have this feeling that's a hole without a floor, without any bottom. It's going deeper and deeper and deeper. You want to see it stabilizing, it's getting constant, and 2% minus year on year is not that constant. When you see, check this out, guys. I don't want to be too harsh. I don't want to be too negative. But again, I'm just sharing my opinion. Revenue growth, 20% 2024 was 32%. Yeah, now it's 22%, 10% down, guys, and now another 2%. I mean, yes, it's not 10% down. I mean, it would be crazy if it's 10% down, but it's another 2% down, and I don't see why. I don't see why when I take a look on other cybersecurity companies and how they perform, and I don't see why when I think, okay, but the technology is right, cybersecurity demand is existing, especially in times of AI, and when now SentinelOne is not performing, when will they perform? Yeah, and I mean, unsecurity. Not having the security, to feel unsafe, to feel unsecure, it's, I think, an uncertainty in general. Uncertainty is the right word, I think. It's I think the most negative aspect which you have in the market. The same like now with the Iran war, with the US and Israel and this kind of stuff, or with this shift. Will AI substitute and eliminate software solutions like SAP and like Salesforce and like ServiceNow and all of this? Will this be the case? Yeah, and Adobe and whatnot, or Duolingo, all of this is uncertainty driven, let's say like this. And yeah, SentinelOne is already part of this discussion and is already uncertainty driven. But additionally, from my perspective, there's some extra uncertainty because of this individual development in terms of profitability, in terms of revenue. And again, we have a high growth history, and that's gone for sure. Maybe somehow, because out of nowhere we come back, but I really hope for more than 19.8 year-on-year growth. I really hope they can keep at least the 2 in the front, and they can suggest or demonstrate stability, and I'm not sure if that means stability. Not sure. I really want to see, actually, if you really ask me, I really would love to see that they keep 22% growth, that they keep the growth momentum what they already have achieved right now. Maybe it's some sandbagging, maybe they cross it very strongly, but doesn't help me right now as an investor. Yeah, that's the case from me personally. Yeah, and gross margin non-GAAP and operating margin non-GAAP, they are not stating it 1-to-1 right now. Yeah, I mean, they stating the non-GAAP diluted and operating income. It is a shift which might be even a bit more better actually, because it's more interesting for us as investors. And let me quickly check what is going on with the earnings per share Q1 2025. That's like this. It was, you can see here, forecast was by the analysts at least was $0.02, and the result was $0.02. And you can see, wait, let me go back. Sorry guys. Here we have it. They are jumping in between $0.01 and $0.02. So, and now again, I think that is the story what they want to tell, and what I already tried to touch when we talked about the diluted weight, average shares outstanding, is same here. So it seems like they expect that Q1 will be not that compelling, not that convincing, not that strong, because obviously if it goes well, it will be on the same level like 1 year ago, which is madness. When you think about, they are all the other quarters in the recent quarters, they have been way better than 1 year ago. Yeah, but now they already are pointing right now that they would just reach this level or even miss it maybe. And that's the same here with stock-based compensation. But then you can see on the full year, they expect way stronger results. So quite a huge improvement than in Q2 and Q3 and Q4 for 2026. Yeah. Yeah, but the question is, can we stay patient here? And what is the result of it? Will investors say, okay, well, okay, then I stay invested for the upcoming 3 months, or I just wait till earnings results getting released for Q1 and then everything will improve? Or is it more like what I'm thinking right now, honestly? I sell it and I wait for better informations in 3 quarters and expect that I will have enough time to reinvest if I like to do it. And I can imagine that there is this potential, because I can imagine that stocks heading further down. I already have seen it on the side eye, and you can see already minus 5%. And I understand this. And it's really the question, okay, how investors, how analysts weight the Q1 results in terms of the full year results. The full year results, okay, revenue growth that I don't like at all. Again, I really want to see more. More like 1.22 billion, yeah, US dollars. So 20 million, 15, 20 million more I would like to see. Yeah, but full year EPS might be okay, might be not even that weak. And this might be even as well not that weak. And tax rate, who knows? I'm not an expert in this, yeah. Yeah, but this one here, this Q1, it doesn't look convincing to me. It's not attractive. It's not appealing, yeah. And I'm not sure if I can wait for this full year. Yeah, that's the situation right now. That's exactly the situation right now for me. What I think about right now. Yeah, but however, so I can't rate this right now. It's a bit difficult. Yeah, but revenue doesn't look good. Full year guidance doesn't look good. Let's see what is going on with repurchase program. I quickly want to check this. I think I forgot. But they mentioned it was approved, the $200 million US repurchase program of their own stocks, of those shares. I mean, yes, they buy it back and basically dilute it and give it back to the staff. But let's see if there's... Okay, you can see it actually. They repurchased 200 million. Is it right? Yeah, seems like it's the case. If I'm not mistaken, it looks like, as you can see here, they already utilized the full amount to repurchase back stocks. Might be as well have an impact, or very likely has an impact on the results and lower some numbers. Yeah, but okay. So, however, it doesn't have any impact on this rating right now. And yeah, let's go to the verdict, and then I would say we screen together the first market reactions on Seeking Alpha, and I screen what you have commented here at the stream, and I can react to it, and then I will go quickly through the slide deck, yeah, of the earnings results. So guys, talking about the result, top growth, bottom line growth, revenue and profitability, negative, straight negative. Especially outlook is not convincing for me. Again, yeah, it might be the case that Q1 2026 is the weak spot, and then it's improving heavily. But again, it doesn't help me as an investor right now that much, I think. And yeah, unfortunately, this negative picture getting enlarged and goes through when we talk about more company-specific numbers, like ARR. I forgot to left something. Wait, guys, let me leave here some rating. It's 20. Okay. I mean, here I leave neutral because it is the highest net new ARR what they have achieved so far ever, I think. and it's the highest ARR overall in total, and this at least, and again it's a bit more actually important than revenue, at least for most of the SaaS investors, it is more than 20%. Yeah, it's getting down, and I would love to see it higher, but it's still at least roughly on 22%, so that's okay. So ARR is solid, let's say solid, that's okay. But the large customer base doesn't look that convincing. Gross margin, profitability in general, not that nice. Free cash flow margin, okay. Expenses level, okay. I mean, past quarter when I left here rating, it was more or less positive. So that's a little bit unfortunate. What's nice to see is that the expenses to keep the customers, to keep the large customers, that's getting lower. That's nice. And getting new ones is as well on a solid level. It's developing right, so that's nice to see. Stock-based compensation for me, it's straight. I don't like it at all. That it's re-accelerating. I don't think this company can afford this move. Yeah, but let's see what the future brings. Let's see what Q2 brings. Okay, and what I really don't like, really don't like, and that would change a lot for me if the revenue guidance would be positive, would be strong, but that's not the case. The full year revenue guidance for 2026, or how they call it, fiscal year 2027, is 1.2 billion, or roughly, or even below 20%. I don't like. So it's very simple. Most of the calls, it is more difficult to leave a rating, but in this case it's very clear negative rating for me, for sure. And therefore, when we check out the first market reactions, it's not really surprising that we are negative. And honestly, I'm not sure what was mentioned in the call. I'm not sure. Maybe we will check out some more interesting details in the PowerPoint slide deck. But for me, it would be even, I would understand if it would be down 10% or 15% or 20%. And I'm kind of surprised because, as you know, in this current earnings season, a lot of companies provided quite solid results, and the companies dropped like double-digit numbers. Yeah, the stock price after hours, and that it's still quite stable is okay, minus 5%, but it's kind of surprising me. Yeah, and maybe I'm missing something. Very huge aspect will be obviously that the price is already quite down. Yeah, it's already on the floor, and it is already quite cheap. It would be definitely very different if we talk about different valuations of the company. But yeah, so far 5% for me, it's very fair by the market. Still, even for this valuation, would understand if it would be way lower. Okay, let's see what is going on with the first market reactions. If there are some, and there are some, here we have them on Seeking Alpha, a site and platform which I strongly recommend, guys. So Kiwi Prof is mentioning days are limited for the young pretender, zero attraction for the best industry talent to work there. Might be the case, I'm with them. As they said in the Twilight Zone episode, Eye of the Beholder, no change at all. Same anemic financial performance. Yeah, I'm with this. Just own growth instead. I understand it. Valuation is just too cheap, going to pop back up. I don't know why. Where is the trigger? Wise guy investing. I don't see it like this. Accept his opinion, and maybe he's right, but I don't know where this kind of dynamic should come from. I don't see it. Not right now. Yeah, maybe Q2. Maybe they will guide very, very strong results or very strong stuff. During Q1 they will tell new acquisition ramped up so well and Purple Eye even stronger and whatsoever, and now we have our cost, our expensive level under control and all of this, but who knows. El Financiero mentions That money for a while, 80 million stock base, 30% revenue, growth 20% doesn't compute. Yeah, I'm with him. PMG 1959 mentions, this company is a serious disappointer. If you married a woman like the stock, you drive her to the bus stop and tell her to get out. Okay. 2 francs. Someone says something about how undervalued this is. Wait, maybe to this statement. Yeah, we can't tell SentinelOne and drive it to the bus stop and tell it get out. We need to get out, or I maybe must get out. Yeah, that's the right decision. Maybe right result out of it. The consequence. 2 francs writes, someone says something about how undervalued this is. Yeah, might be the case. Kali Butts 10 writes, has to be a buyout right now, right? I have Frisaria investing in wrestling group leader writes 20% growth at minus 29% of region is just nothing special. Yeah, and that's right. I mean, I even read some comments on Seeking Alpha or on YouTube, like it might be the next Palantir or whatever. I don't understand this comparison at all, but okay. However, you can see here we have roughly 10 comments. And 2 of them are, okay, valuation is low, it will drop back or whatsoever. And the others are negative. And that is already the sentiment, it's the market, it's the narrative. Yes, these are retail investors, but I assume analysts are not thinking differently. And yeah, I share the overall opinion of I not always do this, actually, not at every company whatsoever, but in this case, and I defended SentinelOne a lot of times in terms of it takes time and we need to stay patient or whatsoever, but I'm not sure if that's the case right now when I see this. Okay, and now I check out what is going on with your comments, guys, and then I will go on. I'm not even sure if someone's watching. I never check how many are currently live, guys. That's the truth. So sometimes I think I'm talking to myself, but I like that you left some comments. I highly appreciate this. Let's check out what you have written here. Not Western mentioned here in the chat, I don't think it will take more than a year to pay off, so I'm chilling. Yeah, I mean, everyone has his own history and his own take. As I mentioned, I was already invested to this company. I'm reinvested. I decided I have kind of principles for it, and that is what makes it now even more difficult for me to keep SentinelOne stocks as shares. Is other companies are priced quite low, and as well mine other investments like Grab, like Nu, like Reddit, and even maybe I go back to HIMS, even if it jumps back, maybe even HIMS might be interesting for me. And because we have this war, we have this sentiment change with AI and software, and yes, it already hurt as a SentinelOne investor, so it's not nice, but at least I might use the money which is now invested in SentinelOne and use it to invest in the other companies I'm invested in right now and lower a little bit my debt level and can sleep better. I'm actually still sleeping quite well, but yeah, maybe that might be a good catch for me at least, and just observe the situation of SentinelOne from the side of the play field, and same with HIMS, and rejoin if I think now is the right time. Yeah, but each on their own, of course. Peggy Wang writes down too, hope the report is good. Yeah, I hope so as well, but after our price doesn't look like this. Flex Chavez 707 writes, what your thoughts on the Fed ramp authorizations? Do you see them getting more government contracts in the future? Good question. Yeah, now meanwhile I think they have all the authorizations, not just for endpoint protection, but as well for Purple AI. All of this is certified outside like this, and they can now start to negotiate and acquire customers in the organizations of the government of the US, as well I think in Italy, for instance, in other countries as well. And of course, it is as well a benefit for retail business, for private owned and run companies. If you can tell them, look, guys, we are authorized by governments. We are a trustful company. Yeah, that might bring as well momentum too, because I assume when you are, for instance, a CrowdStrike sales agent, so one of the competitors, and you already working with the government, or do we have the FedRAMP authorization? Even to retail customers, you will tell them, look, guys, do you really want to go for a cybersecurity vendor who's not even have a FedRAMP authorization? When there are players like we have proven it, and even the government is trusting us and everything, you know. So I think it has not only an impact on the governmental business, but as well on the private business with the private sector. But I'm not sure how strong their footprint is there. Actually, they're not giving any information about this. I assume they have kind of focused, but as you know, likely there was one, I think, of the top managers in the space had really some trouble with Trump, and then he stepped back somehow to represent SentinelOne for governmental business, and there might be still some negative energy back out of the situation, and maybe it's still difficult for SentinelOne, but overall, I think it's a very important and good, but as well crucial, essential, and no-brainer development that they have this FedRAMP authorization. Again, just because when I think about what are the advantages, how they can promote their solutions, their sales agents, how they can promote their solutions, and compared to sales agents of other competitors of them, and just because of this reason, they need it, this authorization, this FedRAMP authorization, and yeah, I'm glad they have it. Yeah, so I see it positive, and I think it might have as well a good impact on doing business with governmental organizations in other countries, like for instance India. So I see it's good, but I have no clue, because you're writing getting more government contracts in the future. I don't even know how many governmental contracts they have right now, and I think nobody of us knows it as retail investors, and not even analysts likely knows it. So I have no clue if they get more. I don't even know what they have right now, and it can only bring more in if I assume it's a positive driver, but really hard to tell how much and how reliable, how all of this is going, especially nowadays when you have leader like Trump, and I don't think I need to add way more information to this. Yeah. And last comment was from Fork Annie Ildirim 76. Hello. Thank you very much for joining. I'm averaging down also. I bought at $12.8 US. Yeah. I understand it. Again, each on their own. I don't know what I will do. I have really the strong tendency currently. I lean more to actually sell my full position. But again, always disclaiming my own decision. Make your own decision, guys. That's very important. I did a lot of mistakes already in the past, make wrong decisions in terms of my investments, but it's okay because I need to live with it. But don't blame me for your bad decisions, let's say like this, yeah. And no matter if it's in this case keeping the SentinelOne shares you have or selling them or whatever it will be decision. However, I have the tendency to sell it, use the money for other companies I'm invested and convinced in and more convinced about, yeah. But let's see. I would say for my final statement of today, we head back. We check one more time what is currently the price. Okay, it seems to be quite stable, but at minus 5%. That's nice, at least. And now we go to the through the presentation slide deck, but I will keep it quite quickly. I'm not even sure again if someone is still present here, and I need to go to bed as well sooner or later. Let's check out here the cover page. 22% ARR growth, again that's quite solid. 20% in large. Oh, that's not 100,000. That's 1 million plus customer growth. So really large customers, enterprises, corporations. That's nice to see, 20% actually. So that's solid and even stronger than 100,000 US dollars plus. So that's nice to see. And I think they didn't focus this number in the past. Yeah, you can see that the new products like data solutions, AI solutions, it's emerging, it's growing quite strongly. That's nice to see that they are diversified in this regard. Then they have the revenue growth of 20%. That is not convincing for me. Gross margin 78%. Wait. Let me check this. Let me check quickly this. Okay, okay, it's non, okay. So, heading back, it's non-GAAP gross margin. I already thought I did a mistake. Okay. Then we have 6% operating margin, 450 business points margin improvement. Yeah, nice. It's okay. Yeah, okay. Okay, let's go on and dig a bit deeper into it. Strong growth and margin improvement. 6% net new ARR growth. Yeah, net new ARR is not that bad. I already talked about it. Was 63 million or something like this. Doesn't look that bad. ARR is not a big issue. Not a big issue. Achieve full year non-GAAP operating profitability. Yeah, that's okay, but it's non-GAAP. It's for me not that crucial. It sounds nice, but what is behind it, I don't know. It's very limited from my perspective. Yeah, when you don't consider like let's say stock-based compensation, for instance. That is nice. That is honestly nice. That there was always this rumor that SentinelOne might have the issue to achieve good stake in terms of large customers like enterprise customers. You can see here 1 million US dollars plus ARR customers, and it seems like it's going well. Otherwise, they would not state it. And 20% is solid, I think. Again, 18% is not that solid from my perspective. That's actually new. That is how you call this? That's net or gross revenue retention. So gross revenue retention, net revenue retention. So gross basically without upselling and cross-selling, how much IRR you can keep compared to past quarter or past year. Is it full year? It's just a quarter. And you can see, for existing customers without upselling, without cross-selling, still 96% of their existing ARR, they can keep it. But with upselling, they even improve it by 9% with upselling and cross-selling. Yeah? So more customers will go for Purple AI, for instance, and go for more modules. Yeah, they have this flex contract nowadays, which is as well beneficial in this regard. So it's actually 109% is quite strong. It's definitely not weak from my perspective. At least when we talk about those large customers, that seems to be solid from my perspective, and I like that they share it. Platform momentum, product ARR milestones, 160 million for cloud. That's nice to see. It's more than I expected, honestly. And that is one of those what I've mentioned here, 50% plus emerging products. So yeah, 160 million more. That's better than I expected. Like 16% of 15%. for something like this of ARR is cloud is nice to see. That's nice to see. Data is very strong. Crazy, 10% roughly of the ARR. What is ARR currently? Let's check it out. Currently ARR is, wait, I can share it with you as well. Currently ARR is 1.1 billion. Mm-hmm. So more than, have you seen it? Yeah. So more than 10% is data and and almost 15% is cloud. So 25% already in cloud and data. And then we have 100 million Wayfinder free services. Whatever it is, I have no clue, but it seems like it is as well kind of a new product business, or they stated. And so we have here another 10%. So let's say 30% roughly is just in the three big business sectors. Yeah, data, AI, cloud, and others. Yeah. But this is nice. This 160 million is nice to see. I'm not sure what was the I mean, they did the acquisition 2 years or 3 years ago in terms of cloud security. I need to check out what was the revenue when they have acquired it, but that's nice to see. That's nice. Data is as well nice. Okay, what we have here, AI security leadership, Prompt Security, so the company which they have acquired recently, doubling ARR Q-on-Q, winning global enterprise customers. That's nice to see. I mean, big thing to Prompt Security is, I think, primarily focused on AI agents. Yeah, there's all these AI agents which are nowadays existing with Claude and Anthropic and Gemini and Perplexity and ChatGPT and whatever. And obviously one part is making sure, for instance, your employee is working on a secure level with those kind of agents and AI. And I think Prompt Security is helping in this regard as one aspect. And it's nice to see that. I mean, doubling ARR Q-on-Q, that seems like very, very strong. But of course, it hits perfectly the nowadays the environment, the development, the news, all of this which is currently focused. Prompt Security is catching it very well, and I like this acquisition as well very well. So emerging solutions seems to be nice. It seems more like an issue with the endpoint protection. That might be the legacy business. It seems like really they lose traction here. I think it seems like CrowdStrike, like Palo Alto Networks, like Microsoft, of course, then getting very strong here. And I assume endpoint security might be a bit challenging, because all of this is obviously working well, the emerging products, the newer ones, but not the legacy ones. Okay, and identity security doesn't seem to be that well, I think. Yeah. And I think they did as well an acquisition 3 years ago or something like this. Not sure how reasonable it was, but maybe it would change. Maybe it would change. I mean, this platform setup, they always try to get a nice product portfolio, a really solid, very strong setup, and I think they have it right now. And I think it was stated by Tomar that this is the case right now. Maybe they need all the puzzles to really create the full picture, and now approach better to governments, approach better to private-owned companies, and provide the full package. Or at least have something for everyone who's using something. We have Purple AI, a record of 50% plus attach rate on all licenses sold in Q4. That's nice to see. So really, customers understand nowadays AI. It's not something like exotic, and they don't understand why we should go for it. It's like more than every second customer is deciding for it. That's nice to see. That's nothing new here. That just show that they are the new generation of cybersecurity. But what I'm not sure if that's new, but cloud, I like that on device. It's this classic approach SentinelOne is going for with this autonomous agents. They basically establish on all the devices how they protect endpoints, but it's nice to see that they have this cloud here as well, and it seems like cloud is working well direction. Okay, that is as well not new, that's just as well showing the history, but you can see here really since 2013, since foundation, that's really the truth. They promoted it, they focused AI, and that's nice to see. Human expertise, data and AI automation, complete attack surface protection. Alright. Oh, shit, what have I done? Okay, let's go back. Okay, then they show they have the Singularity platform, and they always offer to integrate other solutions into their stack, let's say like this. You can see here the big key security solutions: endpoint, identity cloud, AI security with prompt, for instance, again. Then they have here the operations, okay, and the different source, let's say like this. And okay, that's the classic MDR and Wayfinder. I have honestly no clue. I will never be a cybersecurity expert, but I even try to always dig a bit deeper, but it's definitely challenging. And I honestly, before I say something wrong, tell you something wrong about Wayfinder, I'm not telling anything. Here we have all the solutions. That's not new. We have the total addressable market, which is quite large. But of course, it's about, when it's so large, guys, why 20% growth? What 22? What's going on, guys? Then we have this ecosystem. Here we have as well this FedRAMP authorization. And KNAP. So as well, cloud protection is as well part of it. Yeah, I forgot. Then we have all this research and rating agencies who stating that SentinelOne providing good solutions and the company itself is executing well. That Purple Eye is helping. You can see SentinelOne is positioned very well by Gartner. At Frost and Sullivan. Some additional awards they have achieved. What's this? I don't know this. IDC MarketScape Worldwide Extended Detection and Response Software. Recognized as a leader. Okay. Strategies, capabilities. Okay. Participants, contenders, major players. But it seems to be very close here in a lot of different EDR. So that's EDR. They mentioned here MDR, and there's as well EDR. However, you can Google it if you like. Then you know what's the difference about this. However, it's as well a big business, a bit older actually, I think. EDR and MDR, it's more or less, I think, all the same, likely, roughly the same. But you can see they are for sure competitive. So they're not just competitive in terms of endpoint security, which both ratings are about. They are as well competitive in terms of their EDR. That's nice to see. Yeah, but you can see as well competition is strong, and there are not many contenders or participants. Basically, all of them are quite developed. Different prices are good. Okay, so financial numbers. ARR we already covered. Yes, they grossed the revenue. That's true. So very slightly, but they make it happen, and that was as well one of my targets. And respect to those who deserve respect, they make it happen at least. I'm happy because during the year, I think they reduced the guidance already below $1 billion revenue, and I'm happy that they achieved it. Gross margin seems stable on a non-GAAP level. Operating margin on a non-GAAP level, first time positive. Okay, at least something. Annualized recurring revenue, again, I think that is quite solid. It's quite solid. It's important that it's quite solid. It could be in my position, in my perspective, better, but you can see it's somehow stabilizing on this low 20% scale level. But revenue growth I don't like. Met or exceed guidance. Yeah, it's okay. It's always met or exceed guidance. That's okay. But however, it wasn't that strong from my perspective, even if it's an all-time high. Gross margin, non-GAAP. Everything's non-GAAP nowadays. What's going on? I think that was not always the case, but it is how it is. But non-GAAP, it seems like stable. Operating margin is improving. Non-GAAP net income, yeah, it's improving. Free cash flow margin, non-GAAP, cool, but not on GAAP level. Customer growth, platform momentum. Okay, let's see what is going on here. 100,000 year on year, 18% up. And you can see they just show past quarter and this past year and this year. It would be nicer to see it like this year. Yeah, so even the quarters in between, because then you would see that the customer growth is getting more and more flat, yeah, in terms of percentage. That's not nice. Percentage of enterprise customers with 3 or more solutions. Okay, that's nice. That is what I actually like. And it's for the full year, so we need to take care of full year 24, 25, 26. 3 or more solutions. Yeah, and then it's just about up and cross-selling and how the customers adapt to their modules, their products and services. If they not just go for endpoint protection, but they as well book as well as products for cloud, for identity, for MDR or whatsoever, they book all the service on top of it. And of course Purple AI. And that is nice to see that it's developing that heavily. You can see that upselling and cross-selling didn't work out well 2024 to 2025 with 8% up, but now they make a huge jump. So that's quite positive actually. So somehow it seems like customers stay loyal. It is existing. So as soon, it seems more like SentinelOne doesn't have big trouble. I mean, it doesn't seem, it was never actually, there was never this big doubt they have bad solutions. And it seems like that's the case. It seems as well when we check out the NRR and GRR, which is with 96% and 109% on a quite solid level. So customers seem to be loyal. It's more like ramping them, onboard them, acquire new customers. That seems to be very challenging. The market seems to be very, very, very competitive here. Okay, now we check out what is going on with 4 or more solutions. And here SentinelOne is even stronger. It's even stronger. So you can see, I mean, the nice message is 2 or 3 customers have multiple solutions of them. Yeah. So more than 50% have multiple solutions, multiple products, and even many solutions, not just multiple like 2 or 3, but 4 or more, almost 50%. So that is growing very, very strongly. People adapt to it, they understand it, they go for it. That is nice to see. That is nice to see that this jump is that strongly. It's nice. Percent of users with 5 or more, and here as well, the adoption level is very strong. So overall, this one I don't like, and I don't even know why they put it in here next to those module stuff. Maybe they want to show, okay, we can transform those many customers to large customers or mid-sized customers of us. But this is way more clear for me, and it shows that even there's more to come. Yeah, maybe after next year we talk about 30% or even 40%, 5 or more solutions. Yeah, so it is not about getting more and more customers. We are now on a stage likely that it's about using the customers you have and transforming them to the mid and large sized customers. That is more, I think, the target right now for this company. Yes, of course, always getting complete new customers, new caps. But I think focus is higher now on getting more out of all of them with up and cross-selling. Healthy retention and expansion with 100,000 ARR customers. Yeah, I'm not sure. But it was already higher. I mean, GRR again, cross revenue retention. So without up and cross selling, it's stable. But the upselling and cross selling then seems like it's getting lower. Yeah. So the difference was, you can see here, it was past quarter already 16%, and now it's only 13%. Yeah. Which makes the difference in terms of up and cross selling. But however, I'm happy that it is that high, I must say. I'm happy that it is that high. Maybe it's re-accelerates even in the future. We have the guidance we already covered. And that's it. I mean, when I check out this slide deck, there are definitely some positive aspects about it. Some positive details they add, but of course they can select it very well because it's their business and they can decide what they want to show and share and what not. And beside this standard information, I like this module thing very much. I mean, they always not like that CrowdStrike sold their stuff in modules. They always talked about, we don't sell modules, we sell solutions, and we don't need to go for this module approach. And then in a certain point of time, they changed it, and now they as well define themselves in solutions, in modules, let's say it like this, yeah. And I think that makes the change. But there as well, you can see technologically, SentinelOne seems to be always on a good path, always in the forefront, always in a kind of a pioneer role, quite solid. But in terms of sales and marketing, it seems like they're not executing well. Didn't execute well, and they always just catching up. They are always second mover, third mover, whatsoever, and it never worked out that well. And they always need to copy the competitors, and I don't like. I mean, if you want to be the predator, if you want to be the innovator, and if you want to be a pioneer in a certain level, you need to make the pace. You need to lead the crowd in some direction. And yes, maybe technology-wise they're doing this, but it's not worth that much if they not can bring their horsepower on the street, and accelerate in terms of sales. And upselling, cross-selling looks good right now, but it still seems they always are second mover in this regard. And really hope they can change this pace. And therefore, I mean, I'm quite sure sales agents, maybe they deserve it, but for sure they earn a lot of money at SentinelOne. I'm quite sure, but guys, sell this kind of stuff. Management, please make sure, if you have this great and amazing technology you're stating here, and the research houses are basically confirming you have it, then please put the horsepower on the street and sell it, and make sure customers or potential new customers, prospects, they understand what they get when deciding for SentinelOne. Because I'm as well convinced you have amazing solutions and customers are really happy with you. If you check out Reddit threads, for instance, subreddits, whatsoever, you can see people talking good about SentinelOne, very good. But I think it's not about the customers you have, it's about the customers you not have. And to be more present and popular around them. Yes. Let me check one more time. Aftermarket price is -4% after hours. Let me check one more time if there are new comments here. One more comment. Queddle replied to Alpha Sierra Investing. Well, tech companies use the rule of 40, but it's still more like 25 versus 40% the rule, though. Rule of 40 is not nice. For sure not. And I wanted to check very, very quickly with you guys if there's already some information about the earnings call. Some transcript. Oh no, it's not. I think assume tomorrow it will be uploaded here on Seeking Alpha. It's always quite quick, but I assume it takes a bit more time. And then I can add the missing numbers, which I've showed you here, like international revenue share, like RPO, remaining performance obligations, like customers on an absolute number. I can add them, and then I can make more clear verdict. I don't think anything will change the results of this quarter, and again I'm concerned, or I assume next quarter as well will be not the best one when I check out the outlook. And now for me it's really the challenge to figure out how I behave in this situation. Do I expect, okay, maybe there will be a recovery of software companies and Iran, you know, like Gaza and Israel, this war getting settled somehow, and markets recover and the software AI situation gets better, and maybe because as well cybersecurity has kind of a role in this game. Maybe because SentinelOne is just the company traded there, it may participate very strongly in the future. I really assume it will be for me like this. I will check the earnings call, what they have mentioned, if there's anything what I can read in between which convinces me to hold it. And the second perspective I need to consider is what is about the other opportunities? What are the opportunity costs? Should I transfer this money, at least for the next 2 or 3 months, into Reddit, New or Grab, which I'm convinced as well, very strongly? And is my thesis still alive for SentinelOne? Or should I just keep the shares, maybe even catch further shares and invest more money in it, and just hope it's recovering in the next weeks, not hitting too strongly. It's already evaluated quite low, and it stays quite stable in terms of the share price, and all is good. And from Q2 on, and maybe with some kind of tailwind, with some support, positive momentum resulting out of a potential Q2 2020, fiscal year 2027 guidance, Q2, so next quarter, things will change and really some acceleration taking place. So maybe reinvest right in advance of next earnings calls, maybe. I mean, it's never a good decision to do it like this, but I'm thinking just loud. OG the trainer, hi, thank you very much for joining, and thank you very much for leaving a comment. You're asking long term. If I don't know, I mean, there's always as well the chance that, or always as rumor, maybe SentinelOne getting acquired sooner or later by a company. I'm not sure if that's the case, because I assume larger players, they prefer to acquire companies which are specialized, like Wiz in terms of Alphabet, specialized on cloud security or whatsoever. Yeah, you want to have this kind of pieces, these bricks you put to your existing house of cybersecurity products, and I think SentinelOne is already almost too widespread. It's not this classic acquisition target, let's say like this, even though it definitely contains, I assume, strong value in terms of the technology, and I assume some enterprises might utilize this potential very strongly actually. So it might be acquisition target, and that might be a good bonus when we talk about the long-term perspective, but it's really hard to evaluate or think about, okay, I mean, what will be in 5 years? For me, it's really, I think it's always for SentinelOne was not the target to get acquired and achieve an exit through this aspect. I think always the major target was to really make make this move to be as well one of the large cybersecurity vendors, like Palo Alto, like CrowdStrike, like Microsoft, really, which make this really, before closing the door, they get out of it and they are large enough and they can do it. They can make it happen because at a certain point of time it will be very difficult for new players to establish this widespread platform with kind of several solutions and so on. I think it will be very challenging for new players. And I think that's a good aspect about being invested in cybersecurity because yes, there is a lot of competition going on, but if you make it happen to stay independent and be one of the larger ones and make happen to acquire new ones and not get acquired, then you have a future. And so I think actually SentinelOne make it happen. I think they made it. So I think there is some long-term potential. Otherwise, I would not think even twice to be invested in it. I would sell immediately. But the question is, again, what are the opportunity costs? So what kind of performance, of yield you are missing when investing SentinelOne on the short and mid-term? That's always the question, I think. And that's really challenging question. And again, I hope when I check tomorrow the earnings transcript of this call, I'm getting a little bit more, I have a little bit more information, it's a little bit more transparent, and I can make a better decision. As always, I don't think, for me, most of the time, holding a stock is not the option. Either when it's dropping, I invest more money, or I'm selling. And currently, because other companies I'm invested in are as well priced relatively cheap, I think I'm tending more to sell the full position. That's my tendency. We'll see. But maybe I will change my mind. I have different thoughts tomorrow, different thoughts when I read the transcript of the earnings call. And I think, it's already valuated that low, and there are definitely some promising aspects, and analysts reacting kind of well or positive about it, even though results now are not that great. The guidance, the outlook looks good. Then, I mean, if this perspective, this long-term perspective or mid-term perspective in the call has a good message, and it really seems like, okay, maybe Q1 is not the great one, but from Q2 on, it's getting very positive, and we really see acceleration is going on. We really see positive development, and we can prove it with numbers. And we expect it will 100% takes place soon, or likely, very, very likely. That might change things. And what is good as well, what I've not talked about today, is they have a new CFO, which I have announced, I think, on the 4th of March. So, roughly a week ago. That's nice that I have found a new CFO, because last earnings call, it was a different, additional bumper, say like this, that the CFO announced she will left the company, and now we have a new one. And I'm very happy about this, that in general, SentinelOne has a new one. Yeah, guys, that was it for today. Thank you very much for using the comment function so actively. That was really nice that I didn't join or experience this earnings results alone, because they have been that positive, and I'm always happy that when earnings results are not positive, to share the experience. Feel free to if you liked what you have seen, then please feel free to leave a like to the stream. Feel free to subscribe to my YouTube channel. Feel free to follow me on Instagram. A Sense of Capital is my name there. I always share as well my purchases and my sales of my shares and my companies I'm invested in. So, and keep you up to date about everything. So feel free to join. And of course, it makes me happy if you leave a like. So I would highly appreciate it. Maybe it makes you happy if you make another person happy. So appreciate it. And guys, again, that's it for today. Thank you very much for joining, very much for leaving all the comments. I appreciate it very much. I hope you make the right decision with this company as well with other companies. But more important than this is as well, I think, staying healthy and being social, involved into the environment if you at least want to be involved. So take care of you and the beloved ones around you, and take care of your health, of course, because money is not worth that much if you're not healthy, for sure. Guys, again, thank you very much for joining, and see you next time. Bye and cheers.
A sense of capital.